Hello viewers, in this video we'll be going over the S&P 500 ETF ticker symbol SPY. In this video we'll be going over where the SPY will head to in the next coming days with a day-by-day probability model, how we found the models, and where the S&P 500 will head to in the next coming days. So back to the technical analysis. Today we are up 24 basis points. On the 1 hour chart we are at overbought RSI. We see a divergence overnight or in the morning on Friday, and if we expand out to the 4 hour chart, we're still overbought on the RSI as well. We did not see a divergence anytime soon on the 4 hour MACD, and we have not touched any support. So if we expand out to daily chart, we reached all-time highs again today, and we are currently at overbought RSI, and we have not seen a divergence on the daily MACD, so the uptrend is still pretty strong. So if we were to reverse this trend and head down lower, I do see a possible support at the 18-day moving average, this purple line, around the price of $324.80, and that acts as our past resistance, and since our price is above that resistance level, that now act as our support. So let's head to the day-by-day probability model. So on here, as the day progresses, we do see in favor of 0 to 2% up, or one standard deviation with 50% chance between 0 to 2% in next coming days. On the extreme case, we see a 2 to 4% chance the S&P 500 will head to that higher with 8%. On the other hand, we may see a 0 to 2% drop with chance of 25%. On the extreme side, 2 to 4% drop with a 17% chance of that happening. So let's head to the day-by-day forecast model. Again, this model is now available in the link below, so do check it out. So let's see, 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to January 24th, 2019 to April 22nd, 2019, so let me point out why these two charts are similar. So what we have on the current trend, we start off averaging above the middle Bollinger Band, and after averaging above the middle Bollinger Band, we see a slight dip below the middle Bollinger Band at this instance, and next, afterwards, we see it average again once more right towards the end. So we have those points there, and we start to see a similar pattern on the trend in question as well. So we average above the middle Bollinger Band, and then we proceeded to take a slight dip below the middle Bollinger Band, and afterwards we also average above the middle Bollinger Band again. So we have about 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was January 24th, 2019 to April 22nd, 2019. Back then, the S&P 500 was up around 52 basis points. So if we examine back to the day-by-day probability model, we see that it is under the 50% chance of it occurring, or if you were to bet the S&P 500 will head higher in the next coming days, that is a 58% chance of it happening, but there is around roughly 41% chance of the S&P 500 will head down lower in the next coming days. So again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.